Well, good afternoon, everybody. Good afternoon. Good afternoon. We are starting our 2 o'clock live. Today was a short day in the market. Doesn't mean that we won't come on here and say what we got to say. Say what you need to say. Isn't that what the song says? Say what you need to say. I think it says something different, but those might be the words. I'm not sure. Either way, I'm here for 2 o'clock live this Monday, this holiday Monday. The markets closed a little early today. So we'll talk a little bit about how the market did today in the midst of holiday. How does the market act on holidays? Our topic, hey, Miss Deborah, our topic today, though, is how much money do I actually need to trade? Some people have the idea that trading is expensive. I'm going to clarify that a little bit for you. Going to make it a little clearer that trading is not necessarily expensive, right? Learning is expensive. It's an education. So we're going to talk about that a little bit too. But we're here Monday, 2 o'clock live. Topic is, how much money do I need to be able to trade? So let's talk about that. Please pass the word, share, invite the people, tell folks that Arlissa is on doing 2 o'clock live, talking options stuff. I usually talk it from a seller perspective, but sometimes it's just a broad topic. If you're on YouTube channel, please share with your YouTube community. Hello, EKENDW. How are you doing? I don't think I'll do too much screen sharing. I might, but you can stay here or you can join me over on YouTube so you can make sure that you see the screen. If I decide I'm going to share the screen and you want to be able to see it, hi there. Welcome to our broadcast. I'm Arlissa, by the way, for those who didn't already know that. I'm Arlissa, Educator2Trader. And we're hanging out for a little bit this afternoon, getting ready to go into a holiday day. The market's closed tomorrow because of the holiday. So today it closed early. Market closed early. I think it's open now. I may do some sharing. I'm trying to see what the market did today. Let me go back so I can share my screen a little bit so we can talk about today. I will talk again. The topic for today is how much money do I actually need to be able to trade? And I'm definitely going to talk about that because we want to know, is it expensive to trade? That's a very real question. It comes about very often. Do I need a bunch of money? That's a question. And sometimes when we don't know, we just don't know. That's how that goes. When you don't know something, you just don't know it. Nothing wrong with that. You just don't know. When you don't know, you don't know. That's the way that works. I'm moving this screen over so I can see what's going on here, but it looks like it doesn't want to start the share. I think I'm using a lot of bandwidth between streaming and, there we go, between streaming and doing live on YouTube, on Instagram. I think I'm using up a lot of bandwidth, but we gonna make this do what it do. Well, this is SPX for the day. SPX is the S&P 500. This is a daily chart, so we kind of get what happened today. We start at a higher time frame. Each one of these candles equals a day. If you can see here, today it didn't do a whole lot. Y'all see that little bitty candle? That was today. It stayed within the same little range all day long. What's this from top to bottom? The high of today was 44.56 and the low was 44.42. So it stayed within a 14-point range all day long. And from open to close was 44.50 to 44.55. Literally, it opened and closed 5 points. This is the result of low volume. Not a lot of people are in the market. I did a talk on Friday about why do professionals not trade on Fridays. I probably should expand that to say, why do professionals not trade on holidays? Because they're all off chilling. Everybody who left Friday for a long weekend, they didn't come in today just to be off again tomorrow, right? That's only some of us who have jobs who had to work on Monday, me, and then off on Tuesday, me, back to work on Wednesday, me. I'm a professor at the university here in Jacksonville, and we had class today. A lot of the students didn't come. I was like, well, you know what? If I tried that, they be done found their way to the dean's office. Talking about she wasn't even there. We have a test on Friday, so I was there to do my job regardless. I'm gonna teach this material if it's just 2 or 3 of us. Either way, back to the topic at hand. The today's price action very small. You see, this is a completely not a day that's the way you SPX usually operates. Not at all. 5 points from open to close. That means there was nothing going on. Great day for iron condors, though. If you're an iron condor person, and if you're not, we can definitely teach you how to do iron condors, which is basically a put credit spread and a call credit spread together. And it's got a name. It's called an iron condor, which is kind of what we use for that SPX strategy that I always talk about. That's what we use is the iron condors. But this is today. Would have been a good day for a little bit of squeezing because there wasn't a whole lot of moving. But it also means there wasn't a whole lot of premiums because the volatility, you need that movement of the price in order to get you some decent premiums. So this is today. Let me go to a smaller time frame so we can see like what was the price action actually like during the day. Even though we know it only did its thing for 10 points, we still would like to know this is what the day looked like. It was half a day, right? This was only half a day, and this is what it looked like for the day. It opened here. Actually, it opened here. 44, the opening candle 44.50 is where it opened. It did a little bit of, it tried to drop down a little bit. It's probably got some people thinking it was going to be Putsville. Got people to put their money into the market real quick. First thing this morning. This is a 15-minute chart, which means every candle is 15 minutes worth of data. This right here got a lot of people probably to jump in thinking it was going to be Putstown and pulled their money right out of their pockets because then it spent the rest of the day going in the other direction. You just need to know that the market is being manipulated by, if we can use AI and algorithms for everything else, why wouldn't the stock market use those same things? So it's not easy to decipher, but there are some things that it does regardless. Irregardless, which is not a word, by the way. Irregardless is not a word. So if you're using that as a word, stop it. Stop it. Irregardless is not a word. It's just regardless. That's the English lesson for the day, even though I'm talking about stock market stuff. English lesson today is don't use irregardless. It's regardless. Okay. So it dropped, looked like it was going to drop down a little bit, came back up, still showed some long wicks like it was trying to pull down. Price, if you change to a smaller candle, you'll be able to see that it was pulling down a little bit. And then the bulls, stepped in and said, no, not so much. We'll go up a little bit. And it went up, didn't even go above where it closed. Where it was the high on Friday. We're right back in this zone. Tomorrow's closed. Today it closed at 1 o'clock, low volume, all that stuff. That's what the market did today. Okay, let's talk about what does it cost you when you are getting ready to trade the market, right? I have to not look up there because when I look up there, I feel like I'm looking. There we go. This is a little bit better. Some brokers require a minimum to start off with when you're starting off, and other brokers don't necessarily have a minimum. There's minimums for different things. So if you're dealing with Robinhood, which we talked about Robinhood the other day, if you're dealing with Robinhood is going to give you whatever money you want to put in to Robinhood. That's what they'll take. Right? If you want to put in $50, they'll take $50. You want to put in $5, they'll take $5. You want to put in $5,000, they'll take $5,000. Robinhood is set up to where whatever money you have, that's the money you use for your trading. So if your trade requires $15, that's all you need to have in your account is $15. If you're a buyer and you're buying things, you just need to have the money there that does that. I think Robinhood has since or recently instituted something to do with the margin. So if you want margin money or the ability to use margin money, you can sign up for that, and they put that there. That wasn't there originally, but Robinhood has made a few leaps and bounds since they went public. What, 2 years ago, year and a half ago, I guess, maybe. Since they went public, they got a few different things. Like they used to not have pattern day trader. You didn't have to worry about that over at Robinhood. They would send you the message, but there was nothing that ever happened. They changed that. So if you're doing Robinhood, you still got to watch your three trades in a 5-day window. That still applies over there too. It used to not apply over there, which people like that because they could trade all they wanted in Robinhood and didn't have to worry about pattern day trading. So that's a different thing there. So Robinhood, whatever amount of money you put in there, it's fine, as long as your money covers your trade. If you're doing spreads and you're doing a 1 spread, you need to have at least $100 to do that. If you're doing a 5 spread, you got to have at least $500. Robinhood does not trade SPX or XSP, some of these cash settled ones. Robinhood doesn't do those, which is kind of weird because why would Robinhood not do cash settled stuff? It's cash settled, but maybe it's because of the margin money and such required. I don't really know, but I know they don't do SPX, they don't do XSP, and there's several others that they don't do over there either. Robinhood, minimum amount of money, whatever you put in there, as long as you got the money to cover your trade, you can do it. If you're a buyer, many times you can do some buying stuff for $5, $10, $15, $20. Those are generally going to be many times going to be smaller stocks, but you can do bigger stocks and do way out the money and use the smaller amounts to do buying with that too. So you can use, again, any money there works for that. As a seller, you do need to have enough to cover whatever your sale strategy is. If you're doing cash secure puts, you need to have enough money to cover your selling puts. If you got to cover calls, you got to have the 100 shares in order to do that. Some money is always good there. If you're doing spreads, you need to have the money to cover a spread. That's how Robinhood operates. They do have a little margin and loan thing going, so there's a little more to that. Whatever I tell you here, again, I'm not a financial advisor. Make sure that you do, you look a little closer. If it suits what you need, make sure that you go check it out even deeper, right? So that's Robinhood. TradeStation is another one that I know about. I'm honestly not a big fan of TradeStation, but I traded with TradeStation for a long time, so I do have an idea of how it functions and how it uses. I don't think it's the best of the brokers at this point, but it still does what it does. It still is quite useful. TradeStation, if you want to use the margin money or you want to do those seller trades, you need to have at least $2,000 in order to trade verticals in TradeStation. You need to have at least $2,000 to trade. You can have less money in there and do other things. You can buy shares, you can sell your shares, you can buy options and such, as long as you have the money for that. But if you want to do margin related things, which margin related things are, or let me change that around. If you want to do selling things, then you need to have the margin account. You need to have a margin account. Okay. They won't let you do spreads without having at least $2,000 in your margin account. You can do cash type of stuff, which is buying calls, buying puts. If you want to do covered calls over there, you got to have at least $2,000. If you want to sell cash secure puts, you got to have at least $2,000. That's all in TradeStation. And you got to have the proper level, the options level. That's a whole different conversation on options levels. We'll talk about that another day. Today, though, how much money do I need? Okay, so at least $2,000 in TradeStation if you're going to be over there doing any selling stuff. You can do buying stuff for less, but selling stuff requires $2,000. Then if we talk about Thinkorswim or TD Ameritrade, TD Ameritrade is another one. Your minimum, you don't have a minimum deposit that you need to trade on TD Ameritrade or Thinkorswim. I'll just call it Thinkorswim. Thinkorswim and TD Ameritrade are the same thing. Thinkorswim is the app that connects to TD Ameritrade, but they are the same place. And I think TD Ameritrade is now Charles Schwab. We've gotten a few messages about how they're changing us all over to Charles Schwab, which you have to work hard to do that because you want to say Charles Schwab. It's hard. Charles Schwab. If you talk fast like me, you have to slow down. Charles Schwab. They were TD Ameritrade has switched over or is switching over to Schwab. I just shorten it. And with that, you can use a Thinkorswim app that connects to TD Ameritrade. There's no minimum there. Whatever money you have in your account is what you can use. You can also have a margin account, which allows you to do all the selling stuff in the margin account, right? And you don't have to have the minimum $2,000 there. As long as your money covers your trades, you can trade those things in a margin account. If you want access to the margin money, you do need to have at least $2,000 because they're basically putting a 2x or a 3x or a 4x of what you have there above $2,000. They'll put there for you to be able to use to dig into some margin stuff. All right. And let's talk a little bit about margin because I keep mentioning it and I don't want anybody to be confused about what is margin and what is not. There's two types of accounts. Well, actually with more than two, but we'll talk about just two. You got cash accounts and you've got margin accounts. There's, of course, IRAs and other things, Cash and margin. A cash account, basically, which is at TD Ameritrade. I don't know how it works over at other people. Okay. At TD Ameritrade or Thinkorswim, a cash account means you can do cash-based things. You can buy options there. You can buy calls. You can buy puts. You can buy shares. And you can open and close as much as you want without the pattern day trader worries and concerns. But everything you're doing is based on your cash, right? The amount you have in there is what's going on. If you trade something today, that money settles overnight. If you do options, if you do shares, that takes 2 days to settle that, closing that trade or whatever. You close it, the money settles in 2 days. There we go. Margin account, though, cash account, like I said, you can open and close as much as you want during the day. You don't have to worry about pattern day trader. Everything that's done is done with your cash. If you want to do a margin account, which many of you should, people get confused. They think margin account. Oh no, I don't want the margin money. Oh no, I don't want to worry about getting a margin call. And yes, those things can be real if you're trading to like that. You don't, just because you have the access to the money doesn't mean that you have to be using it. It's almost like a home equity line of credit. If you have a home equity line of credit or a line of credit available to you, doesn't mean you have to use the line of credit. Just means it's there in case you need the line of credit. That's the same way the margin is. It's there in case you need it. If you don't need it, you don't use it. That's the way that is. If you don't want to use it, you make sure that your cash covers what you want. If you're using a margin or the margin part of your account, it's almost like borrowing money from the broker for super, super cheap interest. And they do charge it a little bit every day, seems like, but it seems to be very, very cheap. It might be every month. Either way, you're basically borrowing money from the broker. If your trades, if you have enough things on or trades that are on that take you into that margin money. If your account has $2,000 and you trade, your trades cover less than $2,000, then there's no need for your margin. The broker won't kick in any margin money. You haven't pushed it to the point where you're beyond your $2,000. But now if you trade a bunch of stuff and you're going in deep on your leverage, we even got to be all that deep, to be honest. It depends on what you're trading. But if you're going beyond that, then the margin is going to just basically kick in to undergird your trade till you close them. And if you go back below the margin money, if you don't hold it overnight, then you don't have to worry about it. Margin money is like money that's available to you to borrow if you need it. You don't have to use it. And the only way you're going to get a margin call, people are about, I'm going to get a margin call. The only way you're going to get a margin call is if your trades are way out left and everything, maybe you got a bunch of calls going and everything has gone down really bad. And what your available buying power now is beyond what your account can even withstand. That's when you may or may not get a margin call. And even then it's going to be something, it's most likely, unless you're way out there, it's going to be something that's minimal. It could be you just close a trade and everything's well, or you wait till the end of the day, because sometimes it'll be just moving and it'll say there's, you need to, shore up some money. You just wait till the end of the day comes and it closes up. I find that a lot of times we get notifications from the broker, or we get these notices or the little yellow thing come up at the top, and we start to freak out. The great thing I love about TD Ameritrade and Thinkorswim is that they have really good customer service. So you can go right into their little chat. I see so-and-so here. What does this mean? What do I need to do? Do I need to do anything? Should I just? And that many times they'll say, there's nothing for you to do. Just chill out and it'll fix itself overnight or whatever. So great thing is they got good customer service. You can always just ask them what you should do. All right. So Robinhood, whatever money you put in there, that's the money you use for your trades. You don't trade beyond what you have. I believe they have a margin thing now. And if you're interested in being able to do some other stuff, I don't have the margin thingy with Robinhood, but I do, cash secure puts. I do covered calls. I do spreads. It just all has to happen within the cash that you have available to you. That's the way I do that with Robinhood. TradeStation, I said you got to have a minimum of $2,000 in order to do that, to work over there. I don't know much about Webull. I think Webull may have like a no minimum. You can jump in on that. Same thing for Tastyworks. There's no minimum there. What I don't know with those is how the margin piece works. Most of the ones that are the newer brokers, though, don't have a bottom threshold. They might want, at least $5, at least 10, at least 20. They may not have a low threshold, which used to not be the case. You remember back 15, 20 years ago, you had to put in several $1,000s to open up an account with some of these big guys, and they realized they wanted more money and everybody wasn't going to meet the bottom threshold. So they started, lowering the threshold. Yes, they did. Yes, they did. They let more people come on in. Come on in. We'll take your money over here and you come on in. Thinkorswim, no minimum is there. Just have to have the money there to cover your trades. All right. So to answer the question, is trading expensive? Absolutely not. Is selling expensive? Absolutely not. It is not expensive. I think like anything else, though, you need to know what you're doing. You need to know what you're doing, because you can't just be, there's so many things you can do. If you don't know what you're doing, you can just be throwing money away. We don't want that either. So that leads me right into, I'm an option sellers coach. If you're interested in learning selling, we've got a couple things going on. The option selling, the options 411 for newbies boot camp is open for July 18th and 19th. It's a 2-day boot camp where I do a broad introduction to options, and then I narrow us in to talk about option selling. Right? I'm a fan of option selling. We're the insurance company when we're option sellers. It's almost like we're the Walmart. Option sellers are the people who are selling the option to those who are buying. And your opportunity to win is greater when you're a seller than when you're a buyer. And you need less stuff to do when you're a seller versus when you're a buyer. And I'll talk to you about all that in the 2-day boot camp. You can sign up for that 2-day boot camp over at http educator. Let me see. I can't see. There we go. Educator2Trader.com. They got the boot camp. I hope that's nope. I think I left put so many letters in here. Boom, boom. Okay, there we go. You can go there and sign up for the boot camp. It's there. After the boot camp, we do a 4-week live training where we go in depth on each of the seller strategies. I teach you about options from a seller standpoint and the seller strategies. We do it all in a 4-week, multiple sessions per week to get us down the process, and you can get up and running in a short span of time. That is also something I offer. If you're somebody who is a do-it-yourselfer and you think, and you believe, I'm not saying think, I don't want that to sound that, and you believe and you know that you can just learn things at your own pace. I'm like that. If I get some videos that go in order, I can just work through the videos. And if I have questions, I'll reach out and ask with my questions. There are a lot of people who are like that. Everybody's not. I'm not trying to say everybody's the same, because everybody learns different. But if you're one who can do it yourself, then there's a whole slew. I got courses and trainings for all of the seller strategies that are over there. I teach covered calls. I teach cash secure puts. I teach credit spreads. I teach shorting. All this stuff, you can get it as a bundle if you'd like, and get it all at one time and just go through it. All right. Please like and subscribe to the channel, subscribe to the YouTube channel. So that way, every time we do something, 2:00 live every day, by the way, you can be notified that we're going live or we got new videos coming up. Go ahead and subscribe to the channel. You can find me on all the social media platforms. I also have a Facebook group, Educator2Trader. If you want to join the Facebook group, it is free to all who are interested. Yes. If you follow me on Facebook, you also see that on a regular basis, I post our wins and our gains in the trader community. All that stuff comes out of this SPX playbook. That whole strategy is an SPX playbook. It also has videos with it. If you'd like to have the videos, that is there. Last but not least, we have a membership. We have a membership. In our membership, we meet every morning. We have a pre-market call. We do power hour virtually every afternoon. We trade together there in our exclusive Telegram that we have. And every other Saturday, we do coaching where we talk specific topics. I coach and teach there. And then once a month, we play Cash Flow 101 together as a crew. We do that on second Saturdays. It's good because trading can be lonely. And you need trading pals or trading cousins or trading friends or a trading community, whatever you want to call it. We need to be together because you want to make sure that if I'm pushing this button for this trade, what do y'all think? What do you think? This is where you go into the community and say, what do you think? Right? We all need family and community, and we have that. You can also find that at Educator2Trader.com. All right. Please pass the word along to your trading friends and family. Tell them that, this is what we're doing. I'm a seller's coach. I coach the side of sellers. Many people don't even know there's a seller side. Everybody only hears about buying calls and buying puts. But there's a whole nother side to that. Somebody's got to sell those things, and that's what we do. All righty? Okay. I'm going to end this. There's two things that we do in our community. Woo, woo, woo. We do two things. We stay green, and we get this money. All righty. I will see you all later. Find me on social media. All right. Bye, everyone.